Before we fully begin, we just want to remind everyone the recently posted content, which is available on YouTube, and some of them are available in PowerOptions. We talked about when to exit a married put during a market downturn, if we even needed to exit the married put, and some ideas there. We reviewed the basics on butterfly trades, both iron butterfly and all call and all put butterfly as well. We talked about the pros and cons of the diagonal call, the poor man's covered call strategy, and we reviewed bull call debit spreads as well. We took an issue from Ron on risks of a double diagonal as an earnings play. He made a comment that his Nike position didn't go exactly as he expected. We're going to have a follow-up to that very soon as well, which will go deeper into that Nike position. We don't know his exact trade, but we're also going to take a look at the MU position that we looked at the webinar in that presentation from Friday. And then we had a discussion on implied volatility and market volatility as well. So that's just some of the recently posted content we've had in the last 6 or 7 days. And of course, a reminder too, check out on the YouTube channel, you can go into that playlist view, and there's playlists on various strategies where you can see different presentations on basic structure, setup, tools you can use, management techniques, and much more. So sort of designed to help you view questions, say, on bear call credit spreads and how to get started. The playlist is a good place to go. Most of them are about 8 or 9, maybe 10 videos in there. Some are short, some are long, but most of them are under, I think, half an hour for each of those. All right, now there is a new feature that we just released here on PowerOptions. Not newish feature, but it is sort of a add-on, I should say, to the portfolio tools. So what we did is when you have the portfolio tools, you have your standard view, so you can track your positions, the stock analysis view, which adds those 6 extra columns so you can see the current liquidation value versus future expiration value. We have the Greeks view, where you can see the sum of the delta, gamma, theta, vega, beta for your portfolio, the important dates, when is earnings coming up, ex-dividend date, and so forth. And we just added this new tab for options details. And what's contained in the option details section is the percent in the money for your options, the probability that you'll remain in the money, volatility, the implied volatility of the option or volatility of the stock in your portfolio, the percent implied volatility range, where's your options implied volatility now compared to where it has been over the life of the option, monetary time or extrinsic value, and the percentage time and extrinsic value on your options as well. So instead of going to the option chain or going to another tool, you can just take a look at the options details tab to get some of that more information, or check the Greeks view, of course, if you're interested in your delta or your gamma or your theta. So just made that change this week. So that's available now as well. You want to check that out when you're tracking your positions. Let me go to covered calls. We got a question that came in. So I'm going to go to the strategies here. We're doing mostly spreads last week. Let's take out naked put for the time being and just add covered calls in. And go ahead and save configuration. So I had a coaching session earlier today, and the gentleman was looking at the results and trying to understand the criteria. I think it was the ATM. It might have been an in the money search. Let's just change it to the in the money default screen. Okay, good. It still has that. There's only a few results here. And the question came in regarding the stock price above the SMA 50. The customer wasn't clear on what that means. So it's just, sort of the 50-day running average of the stock price, where it closed over the last 50 days. And we can get a number of the average closing price over those 50 days. As long as the stock's trading above it, we consider it in an uptrend. But he was reviewing the criteria, and he says, well, I don't understand it. If I'm looking for a stock that's above the 50-day moving average, why am I seeing stocks that are down today? And that's not really related. It could be down today, of course, and still be above its 50-day moving average. So let's take a look at Dave & Buster's here. It's down 83 cents. It's in the results because it's above its 50-day moving average. But as we just did with that research tool, I can go to stock research there, and we see our 50-day moving average is 40.45. The stock's at 48.27, so it's still significantly above, almost 20% really, above its 50-day moving average. And its 20-day moving average is 42.28, so it's still above that as well. Why am I bringing this up? Well, there's 2 reasons I'm bringing this up. Number one, Ernie would say this too if you ever get him for a coaching session or have him on a phone call. Up and down little movements are in the noise. It's not related to the strength of the stock. It's just what happens, especially with you looking at a 50-day out, 40-day out, 30-day out covered call. You're going to have days where it's up and down, even though the stock is going in your desired trend. Market's going to dictate some of that as well. based on how it's trading. Now, number one, I still would want to look at the chart, of course. I want to take a look at stock charts here, or big charts, and take a look and see, yeah, okay, so it was a big run up. Yeah, so that could have been related to earnings. And sure, the stock's pulling back off of that, but it had a nice run up to the earnings, had this nice jump here. I'm just assuming it's earnings, but it did have a bad time here, and it was down over here too. Well, this was the whole market, essentially. The whole market was down at the beginning of March and then started to rally a little bit. Maybe not as extreme as this example, but we have to accept that. We have to accept that the end of February here, I'm sorry, the end of January, you see, oh, well, this was down 12, 15 days in a row. We have to understand that the whole market was down during that exact time, too. It was a weak market. And during February, this actually did have a decent rally, while some other positions were moving down in February as well. And then we had that disastrous opening. And we can always take a look at that as well. Let's just compare it to the S&P 500, or it could compare to NASDAQ, but let's just go ahead and see that. And you see here, it's kind of hard to see, but we're following the exact trend line, meaning that Dave & Buster's is following this tan line, which is the S&P 500. And like I said, it showed strong rally. Dave & Buster's was showing a strong rally while the market was going down into February. And then the whole market went down here. And then we've got this run back up. So anyway, the concern was, well, I don't want to see a covered call position or a naked put position or a bull put credit spread position when the stock is down. I want it to be at least moving up. I want to see a positive change today. And I also want to make sure that it's been positive for the last 5 days. Well, those are two easy things that we can do back here in the search. So first, we'll just go into technicals. I'm sorry, I'm going to fundamentals first. Real simple change. Stock change today or percentage stock change today. I only want to see positive stocks. Let's just put in greater than 0. That's all we need to do. And go ahead and submit that. So now we've taken out all the ones that were showing negative stock prices today. These are all positive. Doesn't necessarily mean they're better stocks for the next 35 to 40 days. We would naturally do more due diligence and research and analysis using the more information button there to make sure these are positions that we wanted to be in and sectors that we wanted to be in moving forward. But if you wanted to see more of a pronounced trend, you want to see stocks that have been up at least 4 days or 5 days in a row, that's when we can go into the technicals and use the historical stock trend, stock days up and down, and I'm just going to look for a number of days up at least 5. And not surprisingly, with the last 4 results that came in, none of those 5 results that remained after we put in the positive stock growth today have been up in the last 5 days. And the market hasn't been up in the last 5 days. It has been moving up, but it closed sort of down 1 or 2 days ago, and that's to be expected. It's a harder trend to find unless you're in a raging bull market. I don't even know if there's any that's 4. Let's take a look. So let's just say up 4 days in a row. Nope, none there. So it is a harder criteria. Does this mean, however, that there are no stocks for May expiration for covered calls that have been up at least 5 days in a row? No. What it means is there are no covered call opportunities with the desired implied volatility range for the default search, at least an 8% downside protection, at least a 1% return if assigned, and also are between 9 and 100, have a positive earnings per share growth, relative PE, price to sales, and no earnings between now and expiration. If you have a specific filter that you want to use for a given strategy, such as I only want to see stocks that are up 5 days in a row, I want to go out 1 month out in time, and I want to look for in-the-money positions with a similar return, but I want them to be up at least 5 days in a row, then what you want to do is start from scratch and just put in those basic 5 or 6 filters and then narrow it down further. This is for any strategy. We're just using covered call example. But if I had a specific requirement for a diagonal spread, that I only wanted to see implied volatility ratios from the sell and the buy option to be greater than 1 or greater than 1.5, then I would clear the settings. I'd put in the basic criteria I want. I just want the next monthly expiration. Let's say in April. And I want at least a 1% return if assigned. I'd still want maybe a 6 or 7% downside protection. Let's put it at 6, stay in the money a little bit. And that's it. Now I'm going to go to the technicals. I am still going to look for stocks that are trading above their 50-day moving average, but I'm also only going to look for stocks that are up at least 5 days in a row. And I'm going to check one result per security because I don't want to see, if there's 2 or 3 stocks, I don't want to see 3 or 4 different strikes for each one. Okay. So we have 22. There are 22 total stocks that have been up for at least 5 days and are still offering the minimum return requirement that we have and still have a 6% downside protection for April expiration. But now I can go through and filter further. The first thing I would filter in this case, I know they're all in an uptrend and I know they're up at least 5 days. They have the return that I want, but it's a covered call position. It's got exposure to the downside here, so I want to make sure that I don't have earnings between now and expiration. So of those 22 positions that matched, hey, they're all still there. Great. But there's one big price stock in there, OM, SIBN. I don't know any of these stocks, to tell you the truth. Soho.com I've seen before, but they're all lower price stocks. Pharmaceuticals, therapeutics, and so forth. What does that mean? We got some high implied volatility on these positions and wide bid-ask spreads. Oh, one thing I should always recommend, and I usually do, but I forget sometimes, is that I want to see an option bid price of greater than 0. I don't want to see a 0 bid and a $4 ask. I'm not going to get filled at $2 on that price. There's no way. Also, I want to make sure there's some liquidity on the position. Maybe good open interest of 10, option volume today of greater than 0. This is very basic. Okay, that takes us down to 7. Okay, that's better. Not too wide. This one is huge. The Transmedics, wide bid-ask spread in that case. Yeah, so it's not too bad, but some of them are pretty wide. And we could restrict that as well, of course. The point is that if you have a specific type of criteria that you want to use, that just illustrates the flexibility of the PowerOptions tools. But it might not be a great idea to take a straight default search. Let's go to bull put credit. And let's just take the weekly bull put credit spread default. Great, we've gotten 89 results. And let's say that you wanted to be at least 7% out of the money with a 92% or better probability. Okay, so we still got 4 results in that case. But if you had something extreme, that you were looking for maybe a 95% probability or better, now there's none here, but there might be another 1 or 2. You see, we've got all this other criteria that has to match here, including strike difference, stock above the SMA 20, positive MACD over the last 3 days, avoiding earnings between now and expiration, which I always recommend with any type of credit spread, of course, bear or bull, even debit spreads. But if you had a very specific criteria that you wanted to use for the delta ratio, the short option delta, the probability, the range out of the money, you might want to hit clear filters, start a search from scratch with just the basics for expiration time frame, desired return, in this case for the spread, probability, of course, minimum net credit. Run that search and then start filtering down the results afterwards. Because a lot of times you might just put in a new criteria that you want to see for a specific delta, specific probability, specific volume or open interest. You already have 15 to 20 default criteria in here. You put yours in, you run the search, you get no results. Now you got to go back and try to change all the default criteria. It's better just to start from scratch, start from 0, click on clear filters, get a clean palette, select the basics, expiration time frame, return, probability, range in or out of the money, depending on what strategy you're doing, some reasonable liquidity, and most likely, of course, avoiding earnings between now and expiration, and then put in that one filter you're interested in. See what comes up. Then filter further down to a desired list in that case. All right. So just wanted to show some of that functionality there as well. So you could see going forward how to best approach doing that if you have a very specific criteria. And of course, most of the time the criteria is there for you to use specifically in the search tools for the various strategies as well.